This is the Friday, June 19th, 2015 version of the Market Plus segment. Joining us now is Elaine Kub. Elaine, welcome back.
Good to be here.
And we are glad to have you. Let's talk about this cotton market. We're down 75 cents on the week despite continued rains in the Delta, very, very wet weather in Texas. You'd think there'd be a bull story there to catch this market.
There definitely is a bull story. It's just the market isn't responding to it. As you mentioned, these rains, as of last week's crop progress report, there was still 10% of cotton acres that were unplanted. And because of all the rains this past week, they probably are still unplanted. So it's the same situation as soybeans, where we've probably got unplanted acres, lost acreage for cotton. Unfortunately, more like the wheat market, this is not just a U.S. market. This is a global market, and just overwhelming stocks, supplies all over the globe. So it's going to be really hard for cotton to get any sort of a rally going. So this neutrality, that's a very classic consolidation pattern here at this 65-cent level or wherever it happens to be here at the end of this week, and that's maybe about the best that we can hope for.
Consolidate. Maybe get a pop? Do you think there's a pop at the end of a consolidation, or is it a spike downward?
Well, interestingly, it might be a spike downward because the cotton futures that we trade in the U.S. will only become more global. I don't know if you saw this week that the ICE exchange is trying to create a cotton futures contract that will reflect cotton grown anywhere in the world. The cotton contracts today, as of this moment, have to either be grown in the United States or perhaps still just inspected by the USDA. And so that sort of clouds, it's not a very great world benchmark price. So the ICE contract that will probably be the benchmark in the future will only be more global and therefore continuously less responsive to U.S. concerns.
That will be an interesting market to watch, that contract, as it gets developed and how they manage for quality and
I guess
delivery.
I'm not. Yeah, because that's the problem now, is that most of the cotton that's being traded throughout the world is not ever delivered to a U.S. warehouse. So, and I don't know all of the details if they're going to be trading them both side by side, and if so, what that price difference would look like. So, yeah, it's certainly something, good case studies to be examining.
Yeah, people who love data will love studying those markets. Yeah. Now, I want to bring us back. Let's just talk the U.S. Let's bring it back home.
Okay.
And, well, speaking of bringing it back to the U.S., let's go to Canada. Phil in Ontario, Canada, actually has a question concerned with the uneven wet weather taking the cream off the U.S. crop. He's curious, what yield levels will it take to move these futures higher, both corn and beans?
You know, it'd be really nice if we had a side-by-side year, and we could say that we already know that this year has had not ideal start, and so it's not going to be a record year. Probably very likely not going to have better yields than 2014. The 14 record is probably going to stand. So if we have a worse crop this year or less production this year, shouldn't we have higher prices this year than last year? Like maybe that would be the way that we could make a comparison. But unfortunately, because of that dollar index that has changed so much, that it's not an apples to apples comparison. So it's really hard to predict what a yield. It's really hard to make a comparison between previous year's yields and the yield expectations today at this 166 level versus a 160 level, wherever it may be, if we have continued flooding throughout the summer. You know, it's really hard to then tie that into a price.
Now, that being said, we do have the report out June 30th coming from the USDA, and actually, let's talk to Patrick, at PatMart33 on Twitter. He's curious. He's thinking that 166.7 yield, the USDA's yield that's out so far, may be a little too high. You agree?
Well, sure. I mean, and not that that was a mistake for them to have said that, but conditions have changed since they made that prediction. There has been more flooding. There has been possibly more disease, more leaching of nutrients, more lost acres. So it's very likely, and of course they're going to change it throughout the summer. They always are free to change their projections in each month's report, and I expect that the next change they make to the yield numbers for both corn and probably soybeans also, almost definitely soybeans, those projections are going to be coming down.
And as they come down, though, with concerns of the dollar, with a 1.8 billion bushel carryout from last year, probably not going to see a huge rally even with lower yields. Would that be your opinion?
It's possible that, the headwinds of these outside influences will be more influential than just the fundamental lack of production. Hard to say, though. I mean, if the dollar stays steady here, if these outside market influences aren't overwhelming, then by rights, yield reductions should warrant rallies. And we saw that this week. I really do believe that the rally that we saw in soybeans was justified by the fundamental concerns about flooding.
Now, as we take a look, we've got an interesting question here from Andrew in Illinois. And Andrew is building off that base, that we should see lower yield. That should point to higher prices as we have to ration that scarcity. He's curious, though, what is the worst case scenario for the bird flu? How many more birds could we kill? And could that offset an otherwise steadily worsening weather impact? Could this bird flu bear story pull down the weather market bull story?
Anything is possible. And I would say your worst case scenario for a bird flu is that it becomes, it jumps over to humans, or we have a major economic complete fall apart because of some catastrophic virus. I mean, there's like a real worst case, but the worst case that I think Andrew's talking about is that we have less feed use. And I believe that's pretty well understood, pretty well priced in. So we really aren't going to have another shot at analyzing this until the fall, when we have the wild birds flying back over. So at this point, I'm not too worried about that being overwhelming whatever bullishness may come from the yield factors, but certainly it's possible. Anything is possible.
Okay, and now the production team wants me to note that there never has been a human who's contracted bird flu, so it's still very safe. We don't want to start a panic in the Market Plus
certainly
segment.
Certainly not. Yeah. So, no, it is important. And in fact, I shouldn't even be calling it bird flu, because consumers, that's a scary term, bird flu, versus calling it avian influenza, or just dealing with it scientifically and rationally. You're right. We certainly don't want to make consumers feel bad about poultry production in the United States.
That's right. Yeah. And it hasn't yet hit true poultry production. So far, it's been predominantly egg production that's been influenced. Now, Elaine, before we let you go, talk to us a little bit about this crude oil market. It has been volatile in little ways. Where do you see crude going here through the summer?
Well, I believe down, really, because we see Saudi Arabia pumped another record monthly amount of crude oil. So all of the bearishness that had driven crude oil lower through the calendar year 2015, that's still in play. I mean, it's made a recovery, but it maybe was never justified to make that recovery, because everybody's just pumping out more. There's overwhelming supply. No major concerns on the supply front for crude oil. So
Saudi Arabia pumped a record amount, and last month the U.S. pumped a record amount, and supposedly rigs are being re-engaged. There's been some of those reports.
Well, there you go.
All right. Well, with that, Elaine, we'll let you go. Thank you for joining us this weekend.
It's been my pleasure.
Thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do so, and we will get expert analysis right to you. Thanks for watching, and have a great week.